Hello guys, welcome to our channel. So I'm Daniel Lim from Better Investing Academy. So in this video, I'll be going through with you guys for Baba's latest result, which is their Q2 2025 earnings highlights. So let's get started, everyone. Okay, now, so this is what we will be covering in this video. First, I will go through the financial results, okay, and then I would like to do something different here. Okay, I'll be sharing more, about my opinions, and sharing you my strategy on moving forward and how I want to deal with Baba here. So first, I will be sharing with you, why we didn't buy Baba, okay, since 2022. Then after that, I will share with you, the stocks that we replaced with Baba with. And then, of course, for those of you perhaps who are still, believe in Baba, I will share with you some of the criteria, on when, okay, Baba stocks will go up in the future. And moving forward, okay, I'll be sharing with you my strategy, okay, for 2025, okay, with regards to Alibaba stock here. Yeah. Come, let's get started. Now, first, let's go through the financial results. So Alibaba announced their results on November 15, okay, 2024, okay, quite recent here. So this is the results here. All right. Revenue, okay, is an increase, okay, of 5% year over year. Now, in our standard, let me tell you this, all right, for a company that can only grow at 5% year over year, I believe there are many other companies, way better companies out there, okay, because this Alibaba here has been consistently, growing at quite a low single digit so far. Okay, I will go through with you that their returns, okay, for the past few years here. Then income from operations also increased only at 5% year over year. Net income, of course, there's an increase of 63% year over year, which is very good. Okay, but of course, the main main barometer, okay, to judge whether a company is continue growing is the revenue, okay. But it's quite sad to say they are growing at only 5% year over year. Yeah. So this is the income statement, as you can see. Yeah, this is the revenue so far, and you can see their growth, has been dropping so far. Okay, and then the sudden reacceleration. But then again, okay, continue to go back down, okay, from 8%, 5.9, around 6, and then go back to 5 already. Yeah. So the margins are consistently still very healthy. Okay, around 40% margin, okay, which is very high. Then the blue color is the operating margin, consistently maintained 14, 13%. I got no complaints on that. And then the net profit margin also maintained around the same numbers. Yeah. Balance sheet, no problem. Okay. Alibaba is a very strong company, strong, solid company. Okay. Very hard for them to go bankrupt. Yeah, the assets is very, very high. They have enough of cash, and then liabilities is also under control because the assets is still very high. Okay. Then cash flow statement is the one that I want shareholders here. If you are a shareholder, just be careful because their cash from operation has been declining every single quarter. All right. So the cash from operation, in case you don't know what is it, is the cash that generated from the business. Okay, from their business. Okay. And when they come to the business, okay, they will be recorded. So this is the cash from operation. And it's not so good, okay, to see that they are keep on going down. Okay, and that's why the free cash flow, okay, after they deduct their capex, they also keep on going down. So this is something to, for Alibaba shareholders to be wary about. So overall, okay, this is their revenue contribution from their business. If you have been following my previous videos on Alibaba, I already mentioned, okay, that their Taobao and Tmall group, their revenue is the most important, together with the cloud intelligence group, because these two are the top two revenue contribution towards the whole operation. You can see the Taobao and Tmall group here is a very huge percentage. It's around 97 billion here. Okay, and then the others, okay, it's around 20, and 15. So you want them to move, okay, the revenue growth, their Taobao and Tmall, and of course, together with their cloud business, must grow. But I'm sad to say I have to use this word, okay, it's very disappointing, right, that their Taobao and Tmall group only grow by 1%. Only grow by 1%. Okay. And then their cloud. Okay. You say there's AI, there's demand a lot, a lot of people now, they want data centers, but growing at 7%, okay, with your current resources and scale here is not that encouraging. Yeah. Of course, I know some investors would like to say, hey, but their international growth is very good. Growing at 29%. All right. So there's some hope in there. But the thing is this, you are only contributing a very small percentage towards your portfolio. It's only generating around 24 billion here. So even it grows fast, but it doesn't really move the needle of the whole organization. Hence, that's why if you add everything, their revenue in total only grow at 5%. Yeah, so this is something that I want you guys to know. It's a bit concerning, all right, for Baba's business here. So hence, overall, you can see the revenue, it's growing, but it's growing at a very low single digit here. Yeah, so just take note for this business lah. And that is why the share price, all right, despite they are continue to grow, why the share price keep on going down here. Okay, I will share with you my few reasons lah. Okay, after that, okay, why Baba the share price after so long, why they cannot continue to go up? Yeah. So like I said, okay, in this video, I wanted to do something different, okay, because it's no point continue to dig deeper on what's really happening with Baba, this kind of thing, when the revenues keep on for many quarters, okay, like this one, for many quarters, has been growing, at a very low digits here. All right. So I wanted to share with you my perspective. Okay, my perspective, on how to continue to recover back or even grow back your portfolio moving forward. Yeah. So we have to, go back in history, okay, on why BIA, at that time we didn't buy Baba despite, the share price continued to drop, okay, around 2022 or 2023 that time. Why we didn't buy Baba that time? So we discourage our BIA members to hold Baba actually, okay, since 2022 or 2023 already. Okay, number one is this, my reason. Because at that time, okay, their government, there's a lot of regulatory crackdown on tech firms. If you have been following the news, it's around 2020. Then there's government intervention, okay, on their end financial IPO. It's also around 2020 also. Then there's a sudden, the government suddenly decided to monitor Baba's business, and also their founder Jack Ma. It's around 2021. And then in 2022, there's a lot of management that keep on changing. So all we see here, there's a lot of uncertainty, that the management, it doesn't really have any direction, don't know what are they doing. So we are not really that confident in this business. Yeah, and not only that, the government has a very bad habit of sudden intervention. When you are investing in the stock in a business, suddenly, okay, there's a new law or something that they want to do and disturb the business. So we feel that there's a lot of uncertainty in this business here, and we are really not comfortable with it. Yeah, and of course, there's lack of information that we can dig further lah. Hence, that's why this affected, okay, investor confidence, okay, on Baba and their stock market. Okay, essentially, this is the gist of the reasons why we never even want to touch Baba since then. Okay, so this is when, okay, a lot of our members, when they come to find us, right, a lot of them, I tell you, a lot of them invested in Baba at that time in year 2022 and 2023. So we told them this is our reason, and then we feel that it's best, okay, you decide yourself, okay, and you replace Baba, with other stocks, okay, and these are the stocks that we replace, okay, it's since 2023. C Limited, Shopify, CrowdStrike, Palantir. And if some of them still loves e-commerce and they want certainty, then they can take a look at Amazon also. Yeah. So it's true. Let me tell you guys, it's not that we just say it out. We really did a public live session in our Telegram group. Yeah, you know that we also have a Telegram group. Okay, it's open for the public for them to join. So on 5th December 2023, okay, I paste our sessions, okay, and our messages here for you to say we really find C Limited at the time, okay, and it was a very huge opportunity, okay. And let me tell you, fast forward to today, C Limited was a sweet victory, okay, for BIA, because when the price drops, okay, on 5th December around 2023 there, right, a lot of the investors or YouTubers, they are keep on saying SE cannot grow the revenue, then they manipulate their financials, and they have no competitive advantage. Then they promote, and they say Baba is the better e-commerce stock. But we feel at that date, okay, 5th December 2023, SE is an opportunity, okay, and I shall let their stock prices speak for themselves. Okay, so if you hold, okay, SE for 1 year, it's 150% return. Baba only 13%. But if you hold for 5 years, C Limited give you a 217% return. But Baba sadly give you a negative 50% return. Okay, so if you want to see, okay, my previous sharing on C Limited, you can click the link down below. I already attached it there, and you can see, okay, my thought process, okay, on how, okay, we see and saw C Limited as an opportunity. Okay, we hope you're going to watch the video and learn how we identify. Yeah, so what we did for our members, okay, at that time is, sell the losers and buy the winners to continue to grow your portfolio. Yeah, you can see here our BIA members results. And a lot, you can see why I highlight here to you. You see a lot. Yeah, I went through a lot of painful process of closing beyond hope positions, like Baba, Huya, and others. So you see, Baba is one of them. A lot, I told you. Okay, some of them they write down. That's why I share this testimonial with you. So moving forward, you can see they have a loss of over 70%. So we sell the losers, okay, and then we buy the winners. We revamp the portfolio. So the portfolio has now turned positive with an upside of over 50% growth as of today. This is one of our members lah. And again, another one, same thing. Okay, they cut all the losers, Baba, Bilibili, Huya, Xpeng, all right, and then buy the winners, like our stock, CrowdStrike, Shopify, C Limited, even Palantir. So moving forward today, a 70% loss now becomes 69% or even positive 70%. From negative 70% now go to positive 70% already. This is the results. Yeah. So it was very funny, then when this member posts our results to us, right? You see, a lot of the investors out there, they still keep on holding the stocks because they were hoping the price will continue to go up. This is the mindset, right? But the thing is this, I did a calculation. if let's say this member continue to hold the same stock, okay, you see, these are how the stocks perform today after 2 years. If you never revamp, never sell the losers and buy the winners, right? If you continue to hold this stock, I tell you, after 2 years, Baba give a negative 3% return. Billy give a negative 19%. Huya, negative 16%. Xpeng is positive 25%. But our stocks, okay, his new stocks after he joined us, BIA, you can see, Crowd 247%, Shop 240, SE 123%, and Palantir, of course, you all know, right? Palantir, this stock fly up so high. So it's a 1000% return. Okay, pretty remarkable. Yeah, so that's why you can see he's now enjoying a 69% total portfolio profits. Yeah, and of course you can see a lot of other members the results 125%, and 92% here. Okay, so this is what we did. Okay, at that time. All right. So please remember, I'm now, if let's say you continue to hold Baba, okay, for the past 2022 until today, there's a lot of opportunity cost. Okay, for the past 2 or 5 years. So opportunity cost, just in case you all don't understand, means it's a potential benefit, okay, that you miss out when you choose one alternative over another. All right, I know there's a lot of very hardcore Baba believers. I know that, right? The company is very good. It's really undervalued, but stock investing is another thing. So that's why we decided to revamp, okay, and then focus on other stocks. So if you hold Baba for 5 years, for example, that money is stuck there for 5 years, okay, and you miss out on opportunities on other stocks. Like for example, this one you hold for 5 years, it's a negative 57%. Whereas if you still like e-commerce companies, there's a lot of other e-commerce, Mercado Libre, Amazon, Shopify, Limited. Why you don't want to choose these companies here? And these companies for the past 5 years give you these kind of returns. And this is what I call opportunity cost. Here is the baseline, negative 57%. The others grow to 100%. This is the gap, that opportunity cost that you all miss out. Okay, so this is my view currently, okay, with regards to Baba stock, right? And you must think, okay, a lot of opportunity cost if you continue to invest in a company, right, that is not performing that well. Okay, there's a lot of uncertainty still. All right. Now, nonetheless, if you guys still believe in Baba, no issue. Okay, I never say Baba, the business is bad. Okay, I want to clarify. I never say Baba's business is bad. Baba's business is very strong and the price is very undervalued. But I have the issue with their stock. Okay, this is the difference here. So if you guys are still a believer in Baba, okay, I will tell you this. Okay, when Baba stock will go up? Okay, when? Okay, number one, again, let me clarify. Baba is a good business and it's currently really very undervalued. I know that. Okay, but you must understand this thing. When it comes to practical, real life investing is very different. Okay, when you learn in the class in theory, investing in a good business and at the price now is very undervalued, doesn't mean you will make money. I repeat, investing in a good business, if the price is still very undervalued and you go and buy, it doesn't mean you will make money. Okay, because that's a very theory based, okay, and very textbook investing way. Because you see, for the management, they can earn from high salaries and sell shares from their SBC package, share based compensation. They can still make a lot of money because Baba is generating billions, right? No issue. Okay, but you must understand, for us shareholders, the only way for us to make money is for the price to keep going up. Most investors, okay, they forgot this thing. Yeah, I know I invest undervalued. I know, okay, I won. Okay, there's a margin of safety. All right. But for us to make money, is the price to go up. You must remember that. Yeah. So ultimately, we as shareholders, you want the price to converge with the real value of the company. So the stock price is very low here. The value is here, right? You want it to converge in the future. This is the most important thing. That's the point of buying undervalued, because we know the market will realize the value in the future. That's why the price will continue to go up. All right. But you must understand, stock price will go up when these things happen. Pay attention. When number one, the business is strong and certain. Very important. If a business is a lot of uncertainty of their future, the stock price will never go up because no one will buy. Let's say, for example, Baba, okay, for the past few years, okay, unfortunately, okay, there's a lot of government intervention, the management changing here and there, the business is like, want to grow, don't want to grow. So it's a lot of uncertainty. So that's why the market doesn't really not that interested in that stock. Okay. Then number two, the business must keep growing at a high rate. This is very important. For a business that continue to grow at 4, 5, 7%, no point investing in that company. Because investors rather put it in fixed deposit. Because fixed deposit at the time, okay, when the interest rate was high, was 4%, or risk-free, But why I want to put that money into a company that only grows at 5-6%? No, the trade-off is not good. Yeah. So this is the thing. You must invest in the business, continue grow at a high rate. Preferably 15% and above. Best if you can find 20%. Okay. And lastly, this is the secret recipe. Investors, okay, must be confident in the business. If the business doesn't confer confidence onto the future, then the price will never move on. They will always give them a very low multiple. Okay, so these three things you must remember. All right, so these are the things, right, that if you want Baba share price to go up, these things must happen in the business. Baba must re-accelerate their growth to 10% or 15% per year. Okay, 10% is really very good because they are a very big company already. You cannot expect them to grow 20-30%. Right? They are already generating in the billions, okay, of dollars already. Yeah, so 10-15% is very good. Then their e-commerce and cloud business must grow faster. They must now, okay, have a stable and strong team of management already. You cannot keep on changing management, changing CEOs. Cannot. Yeah. Then another thing, the management must be transparent with the shareholders. Show us, tell us what happened, what is your future plan. Show us the data. All right, this is the particular thing why BIE don't really that fancy going to China stocks because they are not that transparent. Okay, I'm sorry to say that, and they never reveal a lot of things. That's why if you follow my last video on Pinduoduo, right, I decided to stop following them because they at their last earnings they were very secretive. They don't want to tell us anything. So I don't want to invest my money based on hope or even things that I don't know. Yeah. Then another one, the government must return confidence to the investors. You cannot, okay, just simply suddenly go and interfere, okay, or enact new laws and then implement, okay, at the blanket execution like that. Okay, it will affect the confidence of investors, okay, into the stock market and also the company. All right. So no sudden intervention and even surprises. Then only then there's liquidity to push up the price. Then only funds, big funds, okay, or sophisticated investors or even retail investors only dare to come and invest in that company. These are the things, okay, that Baba must happen, okay, and only then the share price will continue to go up. Okay, otherwise, even if you put a stimulus, for example, if you still remember, there's a China stimulus, right? There's an external factor that help push up the price, but it's not sustainable. That time go up, yes, but then go back to the go back again, okay, on the original price before the stimulus already. It was continue to went down. So it's not sustainable at all. Okay. But the only good thing for Baba currently right now, because their business is a lot, they're generating cash, okay, despite every quarter is going down. The good thing is they are now doing very aggressive share repurchasing or share buybacks. Very, very good. Okay. So for the last quarter, they already reduced 2.1% of their total shares in the market. This is very, very huge. Okay, they spend a lot of money for a total of 4.1 billion US, keep on buying back the shares. Now, as an investor, I love this and I support whatever Baba is doing here because their share price is so undervalued and it's good. You use the excess cash, buy back your stock and return a reward to your shareholders. And that is why you can see their share value has been keep on going down. When the share value and when the amount of shares in the market keep on going down, right? Your share value will keep on going up, getting more and more valuable. So when your fundamentals, the per share value keep on going up, okay, hopefully sooner or later in the future, okay, when the things that I mentioned here happen already, and continue to re-accelerate back, the market is more confident on Baba already, that's when the price will shoot up. Because the share value keep on getting more and more valuable, but the market is currently keep on mispricing them. So it's like a spring, it's like a spring, keeping getting more and more valuable, and then when finally all things go well, then it will go up. Okay, so these are the catalysts that we need to wait for Baba. All right. So let me share with you my strategy for 2025. Okay, and of course, before that, I want to share with you guys. Okay, we are very proud to say, okay, our YouTube channel, Better Investing Academy, has already hit 10,000 subscribers. Okay, so I want to say thanks to you guys for supporting and following our YouTube channel here. Yeah, it's been a lot of work, a lot of videos, and thanks for following us. Okay, we will continue to post a lot of videos, a lot of updates like today. And of course, okay, it will help us, of course, okay, if you can comment down below, what are the type of content, okay, that you want us to share further, or even the stocks that you want us to take a look at, or anything. Okay, you can write down there, and then we will take into consideration your suggestions. Yeah. So, and another thing is this, because we hit this 10,000 subscribers, we decided to open up our Telegram group for you guys. Okay, so in here, okay, if let's say, okay, you don't want to miss out any of our YouTube videos, you can just follow us, okay, scan the QR code and follow us in the Telegram, because we will post the video. You won't get missed out. And sometimes, me, okay, I will be sharing my personal opinions on the market, or certain stocks, okay, and you get to learn, every single day. And once a while, okay, I will do a live Zoom session also for the public. Okay, so let's say, for example, okay, on the December 4th, okay, we did a stock sharing session on CrowdStrike, and I just opened it up for the public. And then it was a 1.5 hour session, very detailed session, right, for the public here. Yeah. So if you want to enjoy, these kind of things, okay, do remember click to scan the QR code, or even click the link down below, and join our Telegram. Okay. So hope to see you there. Okay, next time in our live session. So let's move forward. So my strategy for 2025, I will tell you this: I will still not invest in Baba. Okay, I will still not invest in Baba. The main reason is there are way better companies out there. Okay, why? Because you see, for example, you see, Baba is the blue color one, growing at what? 6.35%. For example, very, very low. But there are other better e-commerce companies out there, like this one, the purple color, Mercado Libre, growing at 35%. SE now are re-accelerated, go back to 30% already. Shopify growing at 26%. Okay, and even Amazon, the big company, is still growing consistently at the 10 plus percent one. You see? So all of these are way better companies than Baba currently. So you can see that's why their performance, this is the stock performance here. Okay, now, then the next question you may ask me, Daniel, what if Baba stock price go up after that? It doesn't matter to me. Because if you ask this question, it's like as if my own stocks won't go up. The stocks that I replace with Baba with, as if they won't go up. They will go up. Okay, so I will never miss out on Baba at all. Okay, because why? I made a very logical decision. Baba is, currently, yes, undervalued, but the business is like not so performing well. There's a lot of uncertainty in their country. Whereas there's another stock is already performing, doing super well, okay, in the bull market. So why are you still leaning on, okay, on Baba? So this was my thought process. So I will never miss out on Baba, because the stocks I have, okay, are very, very good. My portfolio of stocks now are very strong, very certain, and they have a lot of high growth. And let me show you. This is the stock picks by BIA. Some of it, I will show you. You can see all this on top the bars, okay, are the 5 companies, their revenue. You can see every single quarter, their revenue keep on going up. Okay, why? Because they are now a high growth company, strong high growth companies. Yeah, you can see this below here is the percentage of the growth. Okay, year over year growth. So you can see the latest quarter, grow 25%, grow 31%, grow at 73%, grow 23%, grow 23%. But the most amazing thing is every single year for the past 2-3 years, you can see their growth rate is at a very high digits one. So you must pick very high quality companies to put into your portfolio. Hence, that's why, okay, this is my results. Okay, one of the funds that I invested in. Okay, it's not that I just show you this one, I pick a good company and just to show you, no, this is real. Because this is one of the funds that I'm managing here. You can see for the past 2 years, okay, you can see from 2023, 1st January until this date today, I managed to generate a 253% return in 2 years. And this is from Tiger Brokers. This is a chart from Tiger Brokers. Okay, the whole market, the S&P 500, returns 60%. Okay, if you generate less than that, that means you are below average market already, the market, the returns. I managed to generate 253% here. Okay, yeah, so this is the strategy that we did, okay, for the past 2-3 years, okay, in BIA. Yeah, so again, guys, okay, I hope you guys enjoy, okay, this session here. So if you want to continue, okay, to gain access, okay, more engagement with me, okay, and of course attend our live Zoom sessions in the future, do scan the QR code or even click the link down below and join our Telegram group. Okay, I look forward to see you guys there. Yeah. So okay, that's all then. All right. So I hope you guys enjoyed this video and I look forward to share more videos with you guys. So thanks again for watching, guys.